Alright, we're here, chat. We're here now. I need a multi-stream, chat. I need a multi-stream. I have to pay Streamlabs so I can stream on different platforms. I'm telling chat that I need a multi-stream.
But yeah.
Yeah. Oh, I need my notebook up. That's what I need up. What am I doing? Oh yeah, trades viz. There we go. I already had it up. Whoops, that's alright. I have 2 tabs. We can have 2 tabs, chat. Alright, we gotta get going. Alright, chat, we'll go through market that was. Take a look at the trades. I don't know that there's much earnings. There's news. Liberation Day, I guess, on the 2nd. I guess we're gonna be liberated from something. I didn't know we need to be liberated, but I guess we do, so let's go with it. Let's see what happens there. Probably just shit's gonna get more expensive. That means we need to make more money. That's what it's telling us. It's like, okay, stuff's gonna get more expensive, ain't gonna get cheaper. Well, then you need to make more money. That's how it goes. You gotta figure that out. So we gotta turn this boat upside down, and we're going into quarter 2. So quarter 1 ends on Monday, and then earnings start popping out. So you get the banks. End of the month, you'll get all the tech. Oh man, this month Crazy. Man, what are the earnings going to be like? They said earnings weren't supposed to change, and then tariffs came, and then I don't know if earnings expectations are changing. I don't know if you'll get news this week of like, oh, we don't expect this or that, or we're revising this or that. I don't know that all that's hit yet. People are getting laid off from the government. They are getting a severance, so you're not going to see those unemployment situations hit the tape right away. Maybe they'll get another job. I mean, a lot of people will. But we'll see how that all pans out. There's like an FOMC meeting this month. Like, I think this week we get a bunch of data. We'll go over that data. I don't know. Like, I gotta find some new trades though. I gotta put some other things on. So I really do need to put new things on for Q2. Like I really do. Waiting till Wednesday, I guess. I don't know what the market's gonna do. I mean, maybe it'll finally just crap out and then it starts over again. Oh, I don't know, chat. I don't know what's gonna happen, but let's take a look, see, and the markets that were, and we'll go from there. Yeah, let me move stuff out of the way here. Water? I want a water. I'll be right back. Okay. Alright, let's take a look at the markets that were. Oh, excuse me. Mid cap value, large cap value. And growth taking a hit. Like, kapow. Everything's down though. Bitcoin's up slightly, that's good. So Bitcoin's churning. Bitcoin's churning up. Why that was allowed to trade 24/7? I'll never know this. Why was one fucking thing allowed to trade 24/7? Nothing else does. Bitcoin trades all the time. I think it shuts down maybe once a day, maybe? Why was Bitcoin... Because it could be mined all day long? I don't understand why that thing trades 24/7 and nothing else does. Like, why don't we keep the futures open 24/7 over the weekend? I don't understand why they would let that do that. I don't know, I have to look it up. Someone out there probably knows. Oh, I need the other chat up because otherwise I can't see anything. Yeah, I need to multi-stream. I don't like these YouTube emotes. I don't like them. Whee! Right on. There we go. Okay. Serious now, chat. We gotta be serious. Okay, so where are we at? So the Dow is down percent, SPX is down 1.5, Russell's down 1.6, and the NDX is down 2.39. If we look at the 10-day, Same pattern. 1 month. Oh, NDX down 6%. Right on. 3 month, 10%. So we're in correction territory now in the quarter. So this is kind of an important inflection point. It's either going to send us further down, or I don't know. Like, I think like tariffs are not, like, with these tariffs you have to kind of reprice everything, and if there continues to be a level of uncertainty, it just makes it harder and harder to price things. Like, if this tariff talk is done, I don't know that it's done though. I think it affects growth. I think it affects consumer sentiment. I think people are tired of paying high prices for stuff. So and if they're just gonna go higher, like, no one's gonna buy anything. At least for a little while. I don't know. Consumer habits, like, that's how we live. We buy things. Like, we have to buy food. We have to buy this or that. Like, that's how we roll. We don't make stuff. We buy stuff. So I don't know. Anyway, this is correction territory. 6 months. Yeah, not great, you know. The Russell's down the worst, like, if you do it year to year here, year over year. But the Russell's usually the first to go anyway. Anyway, year to date, 9%, 8%, 5%, and 2.2%. So not having a great first quarter. I mean, we're just not. I still think people will buy stuff. I mean, when stuff gets bad, it's like people are gonna go to Walmart, people are gonna go. Amazon has relatively low prices. I don't know how Target does. But at least I know personally I'm not gonna stop shopping at least Walmart. I need to buy groceries, so but I don't know that that's enough to, like, the type of growth that the market is so hungry for. I don't know that we're gonna see that. Plus, there needs to be innovation. Like, where's the innovation? You know, with all the AI and whatnot, it's like, well, I don't really use it. I mean, I use it to help me write things, but has it done anything else for me? Not really. I don't know how to use it to, like, make code something to help me trade. I haven't really done that. I know you can do that. You have it write things for you, but I don't use it in that way. I guess I should learn. But anyway, that requires, like, work. Like, I don't know, innovation. I don't know. I think you get more if you use it in a particular way. You get more done than you normally would. I guess it seems so dark in here. I guess it's always this dark. Anyway, I don't know where the innovation is, I guess. Also, you might start seeing a lot of M&A. So you might start seeing, like, these big companies eating up all these other little companies. Because that's the only way they're going to be able to grow. So if we're not buying things, they have to go buy things. And a way to show growth is to buy smaller companies. It's like Google buying Wix. I don't know. I don't know what else will come out. But you might start seeing more of that. That companies will gobble up other companies. Plus, their valuations will be a little bit lower, so they can do that. If prices go down, you can acquire things at a cheaper price. So I would predict that in the pipeline, like, not so much IPOs, but, like, M&A. As things kind of slow down. That's kind of what happened, like, with oil and gas, like, a year ago, 2 years ago. As the price started to come down, they started to do more M&A. That's just observation. Also, there was kind of a fever of M&A for their minute in healthcare. I remember there's, like, headlines of these different things being bought by the big pharmaceutical companies. So I'm gonna guess that there's things in the pipeline to, and plus the regulations are a little bit more laxed on that, and they're going to have to be, I think, if we're not going to go by and I don't know want to use the word recession because I don't know that the term, the old idea of it is still the same thing. I don't know. I don't feel like maybe in the recession coming, like it's not gonna be like previous ones. It'll like rhyme, but it won't be the same. And certain industries have already gone through like rolling recessions. So like different sectors in the past 2 years, like yeah, the market was up. That was driven mostly by the Mag 7. But in other industries, like there's contraction, like, and of course manufacturing, things like that. So there have been sort of recessions in specific sectors or pullbacks or whatever, and I don't know if that continues for the broader market or moving forward. I don't know. That I don't know. But what we do know now is that markets are down. They are in correction territory. I would have said like, last year, like there's no way to be bearish. But now I think it's kind of bearish. So it's definitely, sell the rip. And that might change on April 2nd, but I don't think so. I mean, if you listen to the messaging from, these guys have done long form content, like they're telling you what they want to do, and it sounds a little crashy. I'll just say that, like, they want to reprice this market, full stop, all parts of it. Like, and they want to take out the flood of government money that's in the system. If you stop, the government's spending is like part of our GDP. To take that out, you don't have the government spending, the market goes down. Like, because you're taking money out of the system. I don't know. To me, it sounded like, I don't know how far they want it to go. I can't tell you that. But the messaging is pretty clear. They've said like, oh, we don't care about the stock market. We need prices lower. Like, and things like the housing market have to crack. So that means interest rates have to come down, or prices have to come down, or they both have to come down. And where that leads, I don't know. To me, it's like, they want to reprice this market. Yeah, that's how that goes. What actually happens? We know right now the market's going down, but where it ultimately ends up, I need to be a little more negative. So any pop, I have to consider. At this point, I don't know that I want to take like a full short position in anything, like, shorting SPY or shorting a futures contract, like selling a futures contract. I don't know that I want to do that. I feel a little more comfortable doing contained shorts. Because I don't think it's gonna last forever. I just don't know how long it's gonna last. Like, but it could last this whole year. That's what happens, right? Like, it goes down, past crashes, so to speak. Go until things start to change in October. So this might go on till October or more. I just wonder how fast like, things happen faster nowadays. Like, if this was happening back in the day, you might still see the market crash. I think things would be a lot slower. What they want to do, what they're trying to do. I just wonder in today's day and age, like, technology and how fast we all communicate and this and that. Like, I just wonder if it seems crazy, but like maybe it happens quickly. These things tend to happen a little bit faster nowadays, but that's just me rambling. I think the facts are is that the market is, you know, borderline correction territory. Selling is more common than not. And we have some big information coming that the market hasn't had to price in a long time. And so on April 2nd, maybe it knows a little bit more. Maybe some of the uncertainty comes out, maybe not all of it. It'll certainly be volatile. And I don't know what takes us out of correction. So like if we look at a longer term chart, so if we go, what takes us, there's, gotta get rid of all this anymore. Clarity. I mean, I would say at the minimum it has to get above the 200. And if we want to be bullish again, we need to get above the 200, and I don't know that we're gonna do that. I think realistically, like if you look at this line, it's not bearish. Really not bearish. It's only a short-term thing, like up here. I think our next lows could be down here. I just, with this whole like repricing and like earnings coming up and all these things happening, I don't see the upside yet. I see more downside. See, it's about here. So another 2,000 points. And that would probably firmly scare everybody. I think that takes away a year of earnings. So until it gets above the 200, I'm not bullish. And we have the 50 coming into the 200. What is that called? The death cross, whatever that means. Yeah, I'm kind of bearish. It's sell the rip. Like I'm holding bags. I'm not gonna cover that up. Like holding some bags. I don't know why even. I knew this was not a good pattern. Like we're not making new highs. I knew that, and I go long. I'm like, what are you doing? Well, mostly I just wanted to own shares because that provides a little bit more flexibility, but it's also very bullish to own stock. So when it's not going that way, your portfolio doesn't look great. Yeah, I don't see it and I don't feel it. And I feel like this is probably a low we need to retest just for funsies. How long it takes us to get down there, I don't know. Let's clear some of this up. Back to the watch it like gap down. Although Bitcoin is up, so that's one little glimmer. But I don't think it's enough to take anything above the. Nah, it's not going back up there. We don't live up here anymore. Like, I don't think we're coming back up here for a while. I think down is probably more likely than up. So I guess that what that means for the trades is that I need to, so any rip, I need to sell more call spreads. I think either in things that I already have or in the indices. That's just my point of view on that. So we'll just go with that. Let's look at the best sectors over the. Oh, we need to get stock analysis up too. Get that up. So over the week, we had gold, XLP, oil and gas, and that was it. Everything else is negative. Oh my goodness. Not great. XLC way down there, SMH way down here. We are taking profits and we are negative. I mean, that's not great either. Yikes-o-rama. Let's go to the month. Gold, energy, oil producers, utilities, even staples on the longer term is still negative. 3 months looks a little bit better. We still have gold, energy, healthcare, utilities, very defensive. Like super defensive. So you still want to look in those defensive corners of the market. I just feel like we're still waiting for that one day for all correlations to go to 1 and it just craps out. And I don't know if that's Wednesday. If we finally just give up the goose and it all just goes to crap. But you know what that also does, though? It also sort of forces the hand of the Fed to cut rates. And that's, I think, what we really need, because there's like this talk about, oh, we can't pay down the debt if because it's gonna like reset itself at higher rates. If higher rates, you pay more, and I don't think that's gonna happen. So rates will probably be cut, but that's still not great. Like, I don't know that necessarily promotes growth, and it might restoke inflation. So forever give me there's a gotcha. Like, it's not an end all be all. Things are very defensive. Like, if 3 months, 6 months, the rotation is real. Like, that definitely real. Financials, gold, energy. Gold at 3,000 an ounce? It's never been there before. That's like max uncertainty. Like, this is max. We don't know what's going on or what's going to happen. That's kind of what I think with gold at that. Like, why else would gold be at those levels? Like, why? Like, why would gold gap up like a meme coin? I mean that's the contract change probably. That's probably not. I'm being a little dramatic. This is probably just the contract change, that gap up. But this trend though, like, man, this is where I was like, oh, it'll get to 16. It never did. It never got there. 18 was as low as it was gonna go. Like, oh, I was gonna get it at 16. I was gonna buy some at 16. I didn't get a chance to. It hasn't consolidated in a long time. Gold's due for like a consolidation at the minimum. This thing, they consolidated here for like a year. And then it just skyrocketed. Yeah, this needs some consolidation. We need to get some of that in there. That's not what I was looking at. We look at the market. Gainers on the week, sorted by market cap. Berkshire Hathaway. Tesla, JP Morgan, Visa. How's the Visa chart looking? Like, is that, can I deal with that yet, or is that still like out of scope for me? But if we are going into a recession, there's going to be less transactions, right? I don't know. I think I don't know, the recession of now with so much money in the system, and then like so many different ways for people to generate money. Because like you think back like to 2008 or whatever, like you didn't have Bitcoin, You didn't have like websites where you could sell your wares. You didn't have Uber. You didn't have Lyft. You didn't have DoorDash. So I don't know. What do they say? Like rich recession. Coca-Cola, Chevron. These still look really defensive. Berkshire Hathaway. I think this still is just going up. You can't even get into Berkey B. Procter and Gamble. Kind of having a thought, like, if it does crash, what would you buy? Like, it crashes on Wednesday, market limits down, worst case scenario. What are you buying? What is everyone buying out there? What would you buy? I don't know what I'd buy. I might buy... I'd probably buy more of my index fund. McDonald's is back to 300. Oh no! Oh, Chad, I'll be right back. There we go. Now we're cooking with gas. Mickey D's, yo. All right, let's go to losers on the week. Or by market cap. It was already sorted and I just let it go. Oh, look at that. Tech. All the high flyers. I think this is just profit taking. Like, everybody's like freaking out and this and that and tariff this, tariff that. You need a reason to sell. You need a reason to sell. You don't need a reason to buy. You need a reason to sell. You have to justify why you're selling certain things. Oh, uncertainty, blah, blah. No, they're just selling this stuff because it's been up 40% in the past 2 years. That's my other thing that I'm thinking about. It's just profit taking. I don't know when it stops, though. I don't know when they decide that, oh, I have enough profits. Because, like, uncertainty is going to kind of build on this. So it's like one thing, and then it turns into another thing. And then I don't know if you can control the other thing. So, like, you could think you're doing something, and then it snowballs into something else. People freak out. I don't know. But seeing the names that are here, and knowing what these stocks have gone through, I think it's just profit taking. Like nothing more than that. Hope you didn't buy the bag at the top. Hope Amazon comes back though. Let's all just pray for Amazon. I don't know if it will though. Let's go here. The overall trend is kind of defensive. Energy, financials, healthcare signals a rotation. So these could keep falling. These growthy names that require this or that. But I don't think that people will stop shopping at Walmart or stop hanging out with Amazon. I think it's too ingrained. The name I don't see on here, though, is like Netflix. Netflix is too expensive, though. Oh, no, it is here. It's number 13. Never mind. They need to do a stock split, though. Like, come on. And Costco. You want to keep the market going? Like, let me get in on that. I'm not going to buy Costco at $9.29. I mean, I know it's still that price, even though whatever, like stock splits, blah, blah. Apple would be like $2,000 a share or something like that. They didn't, I think they've split like 3 times. I think Nvidia's, this is like the split they went through. That was like a 3rd split. Amazon's gone through us. They're all like, they'd be crazy numbers if, I don't know if Meta's ever done a split. It's like Meta needs to do a split. Eli Lilly doesn't trade very well, so I wouldn't recommend trading Eli Lilly. That thing, that thing was all over the place. There's like no liquidity there. Walmart did a split. I think like Costco, Meta, Netflix, split it up. Let's go. Split it up. Make it more interesting. But I would assume this continues into the week unless there's some wild change. Like this is risk off. This is risk off. Like these are all the high flyers. So I guess the other lesson too is, should have known this lesson before, but like maybe you're not looking for the high flyers. You're looking for like quality companies that aren't really beaten down, but like didn't perform like Apple or Microsoft or weren't pulling the market up like that. Maybe you're looking for that. Maybe you're just looking for shorts because the market isn't great. For me, kind of just generally shorting the overall indices, probably my strategy. Obviously the NASDAQ is the weakest. And I think our charts confirm that too, with what is at the bottom. And I think for me, the only way that I become somewhat bullish is if we could get some closes above the 200 on the NASDAQ. And if we don't ever get that, I'll continue to be bearish. I think that's... But it sucks because I'm holding bags. I'm holding an Amazon bag. I'm holding a bunch of bags that are fun to sell credit on, but it's not fun to see your overall P&L. Like, I'm just stuck. But maybe we could look for, so I can write down my trade ideas here, so we can look for shorting. opportunities. So like when the market bounces, we can look. We need to manage current positions. I think with 2 of my bags, I need to look to roll down some of my calls, and if they do get called away, I have to say bye-bye. So collect the credit that I can, but if they get called away, it is what it is. My big bags of Walmart and Amazon, um, uh, we'll see. I want to keep doing it just for the idea of like, it's not the same though, like collecting rent. I guess it is kind of the same, like if the price value goes down, then like you collect less rent, but like this happens instantaneously. Like if you're thinking about property, that's a little more slow. That's the point of a more slow investment. This is kind of like hyperspeed to the downside. But I still have my put and I still have my short call. So if Amazon decides to take a wild down move on Wednesday, I have some protection. Oh, did I buy a put? I think I bought a put in Walmart too. Did I do that? Or a put spread? I might have bought a put spread. Oh yeah, I think I bought a put vertical. In Walmart. Oh, maybe it didn't hit. It didn't hit. I still have my call though. So I could do that too. So I can get a put spread if I want to. But 2 of my bags have got to go. And then I need to put more money into the things that are working. So TQQQ, TLT is working. So those are things that I have to put more money into. So switch these bags to put it into the things that are working. And sadly, I'm kind of in break-even mode. So if I can break even this year, I think I'd be happy. 2 years of breaking even, that, hey, you know, it is what it is. Sucks, but that's kind of the goal now. The goal isn't, if I make a profit, great. But I think the goal is to get back to even. However I can do that by the end of the year. So that's, or the end of, maybe even the end of the quarter. Make it a quarterly goal. Try to get back to even on this next quarter if you can. I think that's kind of the goal. You're playing for that. You're managing your positions and just trying to play the market that you have. So manage positions and look for opportunities to break even. All right. Per hour. Oakwood. Yeah, trading like 18. Yeah, I think stuff can come down. They can come way down. I don't think we've seen the end of this yet. I don't think so. I really don't. Yeah, CoreWeave. I don't know how this went. It went to 42. Okay, so sure this supports. Keep an eye on this too. That's the new IPO. Not looking super great, huh? chat. This Seeksa. Seeksa's on the stream now. You see yourself, Seeksa? Oh, it's the Seeksa. Frontman's on the wall and Seeksa's right here. Seeksa's right here. This is the Seeksa. Yeah. Oh, it's Frontman. It's your half brother. Your step brother. What are you doing, Seeksa? Okay. Yikes. Healthcare, utilities, those are it. That's the only thing green on Friday. Oh, that's so bad. This is stair steps up to the sky. Like, look at that. That's an all-time high price. Oh, man. Oh, kitties. 500 though, kitty. 500. Uh-huh. Okay. Alright, let's go ahead and look at the trades, chat. So this is at least the stuff that I took off. The overview. 7 days. Did some day trades on Friday, which didn't work out too well, so that kind of killed the week, but the month pulled off some profits. Trades real quick, I've already labeled them. Let's start with the losers first. So yeah, those are all on Friday. No one loss is too crazy, so I'm not too worried. Money I missed out on this one, but not holding it. That's my thing, so that's what I have to work on too. I have to work on holding the position, whatever that means. Yeah, okay, Kiade. I need to hold on to the trade, because I'm not wrong. OD was 670 on one contract. And I can just play VWAP. Like, if you're trading futures, you can just play VWAP. You don't need anything complex. Trend lines, VWAP, whatever. Like, yeah, I need to work. Just need to work on holding that stuff longer. Like, you get into a trade, you want to be in it all day long. Like, especially from shorting, it's like I said this with shorting, like I can be short Sunday to Friday. Like, as long as you're able to see it, you're able to put a stop on it, you're able to control the risk over Saturday into Sunday, or Friday, Saturday, Sunday, you can't control that risk. You don't know what it's going to do on Sunday in this current environment. You don't know. And so it's not probably prudent to have a short trade on, undefined risk on over the weekend. But Sunday to Friday, feel free. Feel free and hold on to it. We'll get there. And that's a lot of money on the table. And it's not wrong. I think it's just wrong the way that I'm holding them. Not doing it right. This was a roll. This was, I guess, trading shares. Yeah, I'm like not getting freaked out by stuff. Like, you know, wait until the end of the day. But this one wouldn't have worked out, but you know, it comes back if you get out. This one was like a choppy day though. But I do enter up here. I don't enter way down here, so that's, you know, you don't want to enter at the bottom of bars or the top of bars, depending on what you're doing. This was my vertical, so we'll see how that pans out. This is, I don't even want to know what's going to happen in the next 3 hours. Like, we'll see. I'm like gapped down, and then the market will open and then it'll like scream higher because everyone's covering their shorts. Yeah, here's my roll. But if I can roll for a profit and roll it down, I'm probably doing that with Tiva. Tiva and Skechers. We might just see what we could do with those 2 bags, and then again put them into TQQQ, iBit, that kind of stuff. At least the stuff that's working, TQQ and TLT. Because I think the pressure too that I think the biggest thing that needs to happen is that rates need to be cut. And so if you pump up unemployment and you tank the market and this and that and the thing, I don't think the Fed has a choice. Like, they're forcing the Fed's hand without like being mean to Powell. But if they have to start being mean, Trump, that's his calling card. So this is a trade on, I guess, Friday that I didn't log correctly, so and it was a loss. Look at that. Yeah, Friday was not the best trading. It was terrible trading. Not really. I shouldn't say that, because like if you entered here and you got about here, like you're a real trader. Like you're like, yeah, you can really follow the markets. Short, it's just choppy. You know, going short, or the indicators for short are also get you stuck in choppy markets. That's something I need to look out for. You know, you can't mistake one thing for another. Alright, that's it with the trades. If what I'm able to pull off, it's kind of nice. I just, you know, sitting on something that's going down though isn't that exciting. But I have, I don't know, need a bullish market. Five getting in the dryer. What's he doing in there? Is he checking the source? Five in the dryer. No, we're not putting, no animals are harmed in the making of this video. Buffalo boy. I did lower my cost basis, so the more that I roll these calls, the only real benefit is I do lower my cost basis. So the more credit I'm able to receive, the lower the price is. See the symbols. We could take a look at what my break evens are now. So here and here. So I've rolled, it looks like once. And I made $100. Let's see here. So this was the first one. But it should be tied with the gosh, that took a long time. Yeah, this one kind of needs to go. Been in it so long. I mean, that took so long to even just get that. You know, it's just like pulling teeth. What I don't see though are like the not everything. I don't see the shares. So what I really want to see, since I'm running this cover call strategy, is like I want to see how my cost basis is being reduced. I mean, could I see that in Schwab? Like, where do I see that? Do I have to calculate it myself? Like, that's a little annoying, but I mean, I'm not unopposed to doing that. Wonder if it'll tell me my cost basis in here. Go to my positions. It's the call. Oh, I think all this together is gonna give me that number. So, but wait, no, I have that $1,000. So that's 10 off of there. So 2224 minus like 1,000. Oh wait, no. That would be 10. That puts me about 214 minus another 3, so about 211. With Amazon, but the current price is 190, what, 191, 192. Damn, still $1,000 down. So what I'm basically, it needs to stay at like one price, and then I can maybe break even. Let's fight for even, everybody. Let's fight. Fight, fight, fight. to start doing then. Anyway, I gotta go back to what I was doing. Looking at my cost basis is what I was doing. So somewhere around like 214, 211, I gotta let those credits come off. If this put makes any money, that will also be helpful. So yeah. I'll make money on the dividends. Yeah, I don't see a way though that it only slightly better than the NASDAQ. Oh, let me back. Yeah, it was. Hmm. I need to use myself to get to even. I need to try to get to even. That's my goal. The goal sucks, but that's what it is. Yeah, if I can get rid of some of these bags. Yeah, I'll work to get some of these bags taken care of. That's what I was only able to take like 70 cents off of that. Yeah, these lower price stocks selling covered calls isn't really that great. So yeah, we need to get rid of some of those bags. Oh, that looks on the end of the month statement. We have 2 so far. So yeah, $100. So yeah, we're around like 214, somewhere in the 200s to break even on Amazon. I'm not too concerned about that. Like Amazon can move quite a bit in a day. It was up to 207 this week. So I don't really want to get rid of it, but I think if there's an opportunity to like roll something higher for a credit, if I can get a credit on both ends, otherwise I'll just leave the call in place, have it taken away where it is. We'll see if we can make a profit on that. Oh, keep trading this the best I can. Day trading isn't so great. We'll have to figure out how to get rid of some of our bags, and we're trying to work to break even. That's Seeksa. He's yowling. So let's just take a look at maybe some of these sectors that are performing. So we're looking at like XLE. Oh, Seeksa. He's singing the songs. Like a perfect Iron Condor. Huh. These energies names are really strong. Yeti, what are you gonna do? He's gonna jump up again. Jumping up again. That kind of picked itself up. Kitty, you gotta move your little butt. Iron Condor, though, right? Like, look at this, though. Like, look at this uptrend, though, in general. The energy's pretty strong, so we need to look at something in energy. I had Oxy, but man, that thing cannot get above its 200. Like, I wonder if you could sell puts, though. Like, just sell puts in energy. I think that might be a play. I think we might have found ourselves a play, chat. We might sell some puts in energy just to do it. Just to do it, Kiati. Just to do it. We get a sign. We're just gonna sign some energy shares, Kiati. Opportunities in energy. In energy. And then also, let's go to Invis. And I probably need to call Interactive Brokers because I can't log into my account on desktop. It's really frustrating. I can log into the accounts on websites, but not the desktop. Let's go to charts. Let's we gotta change this because we're gonna be in April. So we got XLE here. We're gonna keep that here. We're gonna keep it here. We're also gonna think about crude because we can trade crude. We know how to do that. We know how to do crude. So we should do that too. I'm liking the idea. I don't know what the volatility is here though. Like, what's the real volatility in something like an Oxy? Probably very high. Well, in 34 IV, I mean, not terrible. It's still, this thing's heavy. Like, what's the open interest? So 55 and 47 in May. What about June? The 45s and the 60. Is it 48? Man, I do not want to be holding another bag. Do not bag. Then I feel like it's like if you're not directional, you don't make any money. Don't make any money. Only get Mm. The puts, there's like a call skew. Yeah, there's a call skew in Oxy. It says it's a 0.5 put call ratio, but it's I guess that would make sense. There's more calls than puts. So we can't just sell puts. It's not gonna work. So you either have to do a call spread or you just buy a call. And I don't know that I would do it in one company. Maybe I would just do it in XLE. Although that's like what Chevron and Exxon. Um, let's see here. What could we do? There's like no premium there. You have to go there and there. And then you'd have to go here. 1, 2, 3, 4, 5. I don't like iron condors though. Do not like them. They're too big. But let's take a look. Oh, it's not terrible though. I need something more explosive though. Like we gotta look for something to get us even. But I like the idea of the energy trade. I do like that idea. I think it's one of the better performers here. Let's look at financials. So we're getting a little bit of a pullback. It's still above its 200 though. So pullback's probably good. Bullish. Thanks, JP Morgan. Yikes, JP Morgan. You can't fall below 231. So there's room for a pullback. That's for sure. Like you can see where these lines are. There's still room to scare everybody. Maybe that's the time to like get in there. Like if we get down to like these levels, that would be the time to really jump in. Visa's a little more interesting, although it could go down to here. But even here, I'm still buying calls or call spreads. They're too expensive to just buy outright. And earnings are coming up too, so there could just be this flush into earnings, and then maybe after that you get something. But these are the highest performing sectors. They're interesting. Energy is interesting. So I'll have to think of a trade there. Let's see here. I could. Volatility. Option volume. So we want to see that, and then change the last 20 days. Maybe two, like, let's do $5. And we want 1,000,000 in volume. Oops. I can't do numbers. Maybe not even that much. Like, we need something a little more reasonable. We can do something with, so like 150. Do volume. How is FXI doing? Oh, Mitsubishi. Oh. Huh. Let's see. Buffalo. Bollinger Bay. Yeah, so you can make some really good scans here. Cover, short float. Alright, well, let's add that to the list then. It's at 7, it'll probably go to 10. Sometimes things that go to 7 go to 10. And then they kind of die out. These things are still being traded? Like... Huh. This is an interest. This is getting closer to what I need. That one from Interactive Brokers was better though. Just the 13-week momentum scan. Oh no, okay. Okay. Alright. I think I could probably end here. We did all the things. We went through each index. We went through the sectors. Our best performing sectors are energy, financials, and healthcare, which is defensive. I was running a quick scan. I might add some things to that, but it kind of looks like I can probably end here. I'll put up my short later. Remember, this is for educational and informational purposes only, not intended to be financial advice or recommendation. Trading is risky. Please do your own research. But with that said, we do have some events this week, economic events. There's jobs data, Fed speak, Trump speak, Liberation Day is upon us, everybody. So be aware out there. I expect volatility. And I'll be looking to manage my own positions and see which way the market goes. Again, still the market and NASDAQ below the 200. Not happy about that. So we'll see how the trading week goes. With that, have a safe and profitable trading week, and I will see you next Sunday.